Sometimes we make some dumbass decisions. Good morning, everybody. Good evening, good night, wherever you are. So what we're going to do today is I'm going to go over my past week. I think this past week made around $18,134.78. Comes down to about like after commission and swap, $17,341.49. So I'm going to go over all these trades taken, why they were taken, what was the bias, what was the high time frame bias. Took a little bit of losses, why the losses were taken. Basically, it's going to be a review of how my trading week went. So let's start off with the first trade here. First trade was a buy on GPJPY, which made me $445.64. This was around, like I said, like 10, 11 pips, around like 8, 9 pips. So let's see here. So this trade was taken around after the Asian Open. This was taken about like 9:15 p.m. Eastern, somewhere around that time. So looking at the market structure, this was the market structure when this trade was taken. So now if you look on the 15-minute time frame, excuse me. So if you look on the 15-minute time frame, this was the resistance created at 133 300 right over here. There was another resistance at 133 300 before the market closed on Friday. And then the Asian open candle, this was the candle that broke above the zone. Now when candles break above the zones, they have to be has to be like a lot of volume, which was your Asian open. There has to be some sort of momentum, right? So price broke this area, and it really, I think it created a high. It created a high at right 133,622. So when this high was created, I looked at this chart. Some people in the group, we have a group here in Slack. Some people in the group, they took buys from down over here, and then they created a high. So once the high was created, there's a 80% chance that that high is going to get retested. So when we had a candle close right over here, this was a 9:15 p.m. Eastern candle closed. Once this candle closed, I executed a buy. The buy was executed around, like 133,445. The stop was kept below the previous candle, and the TP was kept around, like around 18 pips. So this was a little bigger than one-to-one risk reward, but essentially I closed my position at 543, 133, 543. I closed it around 543, somewhere around over here, around like 9, 10 pips. I didn't let it run till like one-to-one risk reward, because the reason is because there was a wick here, right? And this candle rejected this area. So I didn't know whether price is going to come all the way up over here or it's going to reject it. So I wanted to secure profits. Now, someone might say this is a negative risk reward. No. When you're securing profits irrespective of the fact if it's a negative risk reward or a positive risk reward. That doesn't matter. At the end of the day, what matters is if you are able to secure profits. Now, let's say if this was somewhere up over here where now your risk reward is, let's say, 1 to 2, it doesn't make any sense, because now your reward is beyond a resistance, and now you run into a problem where you might go into a drawdown, your stop loss might get hit, so at that point you're not securing profits. So it's really important to really secure profits all the time. So that was the first trade. I think the start of the week was really good. So now let's take a look at the second trade. I took second trade was a buy on gold at the same time around when I took the buy on GBJPY. I think it was like a little bit later. So let's take a look at gold here. Now gold, I had already marked up here. Gold buys was basically somewhere over here. Let's go to a 30-minute time frame. Let's go towards the 1st of June. I think the 1st of June was somewhere over here. Yeah, there we go, somewhere right over here. This was the area where the trade was taken. Let's bring it down towards the 15-minute time frame, right? Let's break it down towards the 15-minute time frame, and let me just find it here. Let's just pause this so I can find it. Okay, awesome. Got it. So this is the place where the trade was taken. The only reason, now this was a very aggressive trade. This was taken around 1733.71, somewhere around here. I had a long position at 1733.71, somewhere over here. The stop was kept below the previous bearish candle, and the reason why the trade was taken was because once price came down to this area, I immediately looked left. When I looked left, I saw that there was a consolidation area right over here. So whenever you have a consolidation area, this means the consolidation will have a resistance, and the consolidation will also have a support down over here, right? So we had resistance and we had support. So basically, when this candle closed above 1733, and when I look left, there was a candle that rejected 1733. There was another candle that closed above 1733. So now this is advanced techniques, right? This is not very basic. This is extremely advanced. It's not easy as well. This was a very aggressive entry. So the buy was taken just based off of that fact. The stop loss was kept below the previous candle. I was actually targeting around 1738, which would have been around 43 pip move. But essentially, I did get around 20 pips. I closed at around 1735.89. So 1735.89 was about right over here, around 21 pips. Had a risk of about 18 to 20 pips reward, 18 to 20 pips, same thing, 1-to-1 risk reward. So this played out really, really well. Now let's take a look at the second trade here. The second trade was basically a loss. This was a loss in the New York session. So let's take a look at the New York session here for the next day. Now this was around, let's just pause this and go. All right, so before we talk about the second trade, what we want to talk about is the higher time frames, right? What was the higher time frame saying when we moved into Monday New York session? So let's go down to the 1 hour time frame and let's just kind of break down what was going on. Now, when we look at the 1 hour time frame, this is where the price was around, pre-New York, 5 a.m. Eastern, 6 a.m. Eastern, right over here. You can see how the 1 hour candles were making higher highs and higher lows, and there was a resistance at 133.580. There was another resistance at 133.660. And I guess there was some other things that were going on to the left-hand side that we're going to look at right now. So basically, 1 hour created a support here during London, actually during midnight. Then at London created a support, and then this was also resistance created on Friday after New York closed, and then again after London closed on Friday. So this is a very important area: 133, 100, 133, 200. Very, very important area. Now let's take a look on the 4 hour time frame and let's see what more information we can find. Now, looking at it from a 4 hour perspective, it did seem like there was some sort of a resistance here to the left, which we can clearly see on the 1 hour. If we go left, we will see that there was an area right over here at 133.700. So if we kind of scale it all the way here to the left hand side, you'll see how this made much more sense for price to continue moving bullish, right? So see, 133.700 was an important area which price had to respect. So let's go down to the small time frames and let's see what the entries were taken. Looking at it from a 30-minute perspective, the first buy position was basically a loss, and the reason why it was a loss was because this position was taken at 133.439. 133.439 before the 6 a.m. Eastern candle close. So 133.439, 133.439, somewhere over here. Yeah, this is where the position was taken. The stop was kept below the current 30-minute candle, and the take profit was around 20 pips, 30 pips. This position got stopped out. It got stopped up by the next candle. So then we were like, okay, you know what, we're going to wait now, right? We're going to wait to see what we can do next. So then the next position was taken at 133.467. 133.467 when the next candle opened around here. 133.467, 467. Perfect. So you had this bullish candle forming, this candle formed bullish right before the New York open, and this meant that, okay, now this candle has closed above the previous two candles, so it's made essentially a higher high and a higher low. So now you're expecting the next candles to continue up, right? So next candle, this was the New York open candle. New York open candle closed like a doji candle, but it also made a higher high and a higher low, which made sense that now the next few candles should continue moving up. And if you remember, the 1 hour candles were making higher highs and higher lows essentially overall anyway. So this meant the bias was bullish, price had to move bullish. So it just comes down to the fact that there was no selling confirmation. Someone can turn around and say, well, what if this area right over here, this resistance must have kind of told you that maybe price will reject this area, or maybe price will reject this area. The take profit essentially was around 133.670, but this position continued running till 134.200, right? So if we go up over here and if we look at 134.200, 134.200 is way up over here, right? 134.200, 270. So if we go to the 1 hour time frame, And if we map this out, 134,200, and if we draw a line across this price, 134,200, what you will see is that this was a rejection earlier, right? And this rejection was on the 1st May around close before London closed. This was a big rejection at 134,200. So this is why it made sense to let price run towards 134,200 because once it ran into profits, all I had to do was to put price at was to put stops at break even and let it run till even if it continued to run till 134,200, which it did, made around $2,000, $2,062. After that, after I took this position, I opened another position at 489, 133, 489, which I closed after the fact because I wasn't really comfortable, because that was taken right after I opened this one right over here. So this one I closed right after like $8 profit, didn't really make a difference at all. The third position I took was at 133,522 once we had this candle breaking above. So the next one was taken at 522 somewhere after, I think after this candle closed, after the New York Open candle closed on the 1 hour, I took another one based on the next 1 hour candle, right? Which was also the 4 hour starting to push bullish now. So the next position was taken right over here, 133,522, right over here. And the stop was kept below the previous candle. And after these candles came up to this resistance and they closed above it, the stops were kept at break even. When the stops went at break even, let them run. They both ran till one ran till 134, 207. Yeah, I think both were closed at like 134, 207. So I think that was a pretty good day. That day actually put me up in profits a lot. That put me up around, like $1,000, 1,400, 1,400 plus 2,000, 3,400, 3,400 plus, it was like around 34, 44, 54, around $5,400, in 2 days. So now I had $5,400 to play with for the next day, right? This was now really amazing. Now I was like, okay, I was expecting 5,000 to come into by the end of the week, but I already reached my goal in 2 days. That happens, when price is really, really moving up. If it's trending, you will reach your goals maybe in like a day, 2 days, 3 days, and now you have all that profit to play with for the coming days. So that's what we're going to talk about now. Um, After that, we had the Asian session where I took a sell on GPJPY. It was basically, let's just talk about here. The Asian session sell was somewhere over here, around before Asian Open. So let's go to the 30-minute time frame, and let me just find this here really quick. All right, so this was the Asian session candles here. So before the session started, we were right over here where price is creating like some sort of a resistance. So my bias here was kind of like a correction because we had to move up on Sunday, Monday, and now we're coming into the Asian session for Tuesday. We've had a move up. So I was kind of looking for some sort of a correction, some sort of indications to tell me that price may start correcting now, right? So I started looking for some sort of bearish structure, right? My form of bearish structure was that, okay, once we formed resistance at 137, now 137 is a strong psychological level, right? So let's just understand that first. It's a strong psychological level. 15-minute created a support down over here. Now 15-minute is a weak confirmation time frame, so entries here is a little bit aggressive and a little bit extreme too. So I was expecting price to continue down towards 136,300, right? So 136,300 was an area where I was expecting price to come down. So once we had this candle forming, this big candle, this is where the sell was executed. The sell was executed at this area here, 134,325. 134,325. Oh, this is the wrong one. One moment here. Let me just go back. 134,325. Yeah, my bad. Had a little blooper there. didn't really didn't really understand the blooper. Okay, here it is, right over here. Right. Okay, awesome. So same thing was here. Price was trending up. Didn't really like was looking for some sort of a correction. So I was actually expecting price to continue down towards 134.200 where I closed my buys earlier on. So when price started coming down, the entry was taken around 134.325, which is a short entry. 134.325, somewhere over here. The stop loss was kept above the previous candle. It was like about like 10, 11 pips. The TP was kept at the support, which was around like 10, 11 pips as well. So that's where I closed. This is like a one-to-one risk reward, kind of like aggressive too, because there wasn't much enough range. So you can see with the price was executed 134.325 and exited at 231. So look at this. Look at the price. 231. Look to the right hand side. 231. This is where the price was exited, right? So exited right at the point, and then price started to reverse. How did I know? I didn't know. My plan was to secure 9 to 10, 11 pips and call it a day. I executed, saw price come up to like 10 pips, closed the trade. It actually reversed and closed at like 9 pips, but it is what it is. At this point, I was still up for the day. I was up like about like $5,900. So now I had money to play with for the next day. Now, the next day, what happened was next day was a very important day because that day I made the most money for this year. I think the most I made was in my birthday. But anyway, this price action here ran really, really well. So let me find this out here for you guys. Okay, so this is the 2nd June New York session. Before we talk about this, I want to first talk about that this was the resistance created at London session, right, around 135. Now, 135 is another very strong level, psychological level. It takes a lot for the price to break through it. So once candle broke through 135, there was a support formed here as well. So now we're going to talk about this, but before I want to talk about that, let's take a look at the 1 hour time frames here, and let's take a look at the 4 hour time frames at the same time. Now I'm going to color code this for a better reference. Let's color code this as orange and extend it all the way to the left, and let's take a look at the 1 hour time frames here, and let's see where we were. Now, once price was at this point, price came up, created like a resistance at this point around 135,448. Now, if we were looking for price to continue bullish, the next target would have been this wick fill right over here, 135,745, and then after that we had another target at around 136,500, right? So I'm going to color code these as 135,600 because you see now those are the prices where price came up and rejected it. So these prices are really important when you're leaving runners or when you're trying to see how far a runner can basically go to. So if you look on the 4 hour, this also made sense on the 4 hour right around here and also on the 4 hour right up over here. I'm not drawing zones because extending zones all the way to the right hand side, it takes a lot of time, and basically, I mean, I want this video to be as streamlined as possible. So let's take a look at the 1 hour here now, and let's go down to 30-minute chart, and let's kind of like see that what we were up against at this point. All right, so let's take a look at this. Now, the first position that was executed, let me just color code this back towards gray so that it's better on the eyes here. Okay, so the first position that was executed a 10 lot at 135,400, which was a loss. 135,400, it was executed right over here, 135,400. The stop loss was kept below the previous candle right over here because once this candle closed bullish, I was expecting the next candle to respect the low of the previous candle, which it didn't, but at the same time, when price was continuing up, I opened another position at 135,418. Now, here's the thing. The 10 lot I opened at 407, the stop loss was below the current 30-minute candle. The smaller position, the 5 lot I opened, the stop loss was right above 135,070, 080. That's where the stop was because I was trying to like test some things. I was trying to test like highs and the lows of the London session to see if they really get respected by the New York or not. So that's why the stop loss was pretty big. The stop on my smaller position was about like 35, 36 pips. I was basically risking 10 No, actually around like 50% profits from the last 2 days. Actually less than 50%, like around 35 to 40% profit from the last 2 days. So I was risking those profits to try to see if I can have a higher time frame, bigger trade, right? So the 10 lot basically got stopped out when the next candle broke down here. So it got stopped out around, 135, 323. The 5 lot was still running, so 135, 418. When price came down, I was ready to take a loss, but I was like, okay, if it hits me at stop loss, that's okay. I'll call it a day. But it actually reversed. The 7:30 a.m. Eastern candle started going up. So when it started heading up, what I did was I opened another position at 135. 370, right? So this position was opened when this candle was starting to come down. I opened at around 135, 370, somewhere over here. I think this was an impulse position as well, which I opened because I wanted it to really continue going up based on the previous candle. But as it started to come down, I closed it before it hit my stop. So I think that was a dumb trade I took. So like, hey, pros make mistakes. By far, I'm not a pro, but still, that was a mistake I made. Then, after New York Open, around closer to New York Open, I took a buy at 135. 333. This buy was taken right over here, 135, 333, right over here. I took a buy based on the fact that this candle rejected 135, right? If we had a candle rejecting 135, that means now there's a higher chance for price to continue moving bullish. So I took an entry around 135, 333, and that started running bullish. And at the same time I had two buy stops. I had two buy stops at 135 460 and 135 463, which you can see right over here. And these buy stops lined up perfectly with 135 460 right over here. Let me just remove this one green line here. Let me just color code this with the blue line. So these are my buy stops at 135 461 462, because as price was continuing to break above this area here, which it created a resistance in pre-New York, that means price should continue moving bullish after the fact, right? So buy stops got activated. The reason we put buy stops is because we want price to continue through that area. So price started to continue through that area. So I was like, perfect. Now, once this started to continue, my stop was below the current candle. So now I had three positions running. One was at 135, 418, which had a stop down over here. I had another one at 135, 333, right around over here, because this candle closed bullish. So there was a higher chance for the New York Open. So this is also the New York Open candle, which had a higher chance for the New York Open candle to continue moving up. And then I had two buy stops at 135, 461, which I closed at 10 pips, and I left the rest two positions running with stops at break even. And if you see here, even if this was at 135, 333, putting stops at break even, it just kept on running bullish. It ran bullish till about, I would say, 136 900, was it 136 900, 136 700, and 135 900. So when I close at like 135 918, 135 918, as price started to come into this level here, I closed out before I started to go about my day. But the one position that I had from 135 418, I kept it open till the next Asian session, and that actually ran up towards 136 700. So 136 700, it if we look to the left here on the 4-hour time frame, I'm pretty sure it made sense. Yeah, right over here, 136 700, this area there, if you look on the left hand side. So if I extend it all the way over here, and if I zoom in, this area right over here, 136 700, going on to the 1-hour time frame, whenever price is trending up, you need to look left and you need to go down to the small time frames to find out any areas of importance. So if we go to the 1 hour, this was the area where the 1-hour candles came up before on the 10th of March and rejected it. So what were the odds of price coming back up here again and rejecting it again? So as we moved into the Asian session, as you can see, this price continued to run up. It ran up towards the Asian session, and that's where I closed my trade. So this ran for about, I'd say, like 150 pips. I think it was a pretty good trade. So now me leveraging my profits from Sunday to Monday going into Tuesday netted me much more greater gains. So the only reason you should be leveraging your profits are if you've reached a 2 or 3 day goal in a day or a day and a half. So it makes sense in that aspect to maybe like kind of like really push towards your targets. um, Next we had buys in the actually when I hit this target here, I closed at like 5,800 or $5,900. That one position netted me $5,900. I think the last time I held a buy or a sell for that long was in March when there was a lot of volume in the market. March was one of the biggest months I had. So I mean this position ran, so it put me way ahead for the day. Right. So next, I skipped the Asian session because I already secured profits in the Asian that ran through New York, and now I decided to skip the Asian and go straight towards the next New York session. Now, next New York session started at about, I'd say, at around like 7:30 a.m. Eastern. So we're going to talk about that right now. 7:30 a.m. Eastern was about, let me find that over here. Let's remove everything here and let's draw a support down over here. And let's go to the 30-minute time frame. And what we're going to do is we're going to start looking at it the way we found the trade. So let me just push this up. All right, here we are. So on the 3rd June, I skipped the New York session as well. Didn't really feel like trading in the New York on the 3rd because I was already up for the week, so very comfortable, right? So we moved towards the 4th of June. I think this was a Thursday. Thursday moved towards the New York session. So on New York, I took 2 trades here, which were 210 lots, which I took at 136,565 and 136,600. This was taken before the New York Open. Total, I made around like $2,100 in that day. These trades took about maybe like 5-10 minutes. So the reason why these trades were taken was, if you look right over here, this is where what we were looking at. So overall, 4 hours bullish, 1 hour was bullish. What basically happened was that price created a high before the London session. So a high was created before the London session right over here, which matched up to a support was created the previous day in the Asian session, right? Price came down, kind of like created like a support. We had this candle. Now I was looking for buys, right? It depends what you're looking for. So when price is right over here, there's no sells. You can't take any sells because support is right over here. So there are basically no sells, no selling confirmations. The only buying confirmations came from the fact when we had this candle breaking the high of the previous candle, right? So when this candle broke the high of the previous candle, that's when I opened a buy position right over here around like, 565, whatever. My stop loss was below the current candle this is like about like 15 to 20 pips. My take profit was all the way up over here, which is like about 32 pips. Now, this is a more than one-to-one risk reward. So when price went up to like 136,700s, when we went up to like 136,700s, this is where I decided to close the position. Again, this was a negative RR, but I secured positions. As price went up to like 10, 11, 12 pip profits, I decided to secure positions because I think price kind of retraced and I don't really want to lose profits at that point. I was already up for the week, so I decided to secure all positions instead of holding some at break even and whatnot. So that was a trade I took where I instinctively wanted to close. Now the thing is, whenever you're closing positions, you have to understand now price may start going in your direction or price may start retracing. So it's always a great idea to close positions or maybe secure with runner. I think looking back now, I should have let a runner running up to this point and secured maybe portion of it. That way I should have been up a little bit more than I was. So the reason of doing these recaps is like going through my performance and seeing where I could have done things better, or where I could have maybe let my positions run a little bit longer, which I did, which is good, right? So Let's move into the Asian session here, which is the same day around, I think Asian Open, I took sells on GPJPY. And the reason I took sells, this is really interesting, right? So the reason I took sells was because if you look over here, this was the candle that closed before the Asian Open on the 3rd June, right? This is the Asian Open candle that went all the way down. Now, when you look over here, this is the same kind of like candle which is closing before the Asian Open. And just like right over here, we had a support, right over here, we have another support. Right over here, right? So the idea was that, okay, I missed this Asian session. I didn't trade in that Asian because I already secured profits. But the same thing was here. So I was like, okay, I can probably get a trade coming down towards 137,300, right? So this was a range of like about like a 30 pip range with a stop of about like 10, 11 pip stop. So to really understand this trade, we need to go to the 5-minute time frame because when I executed the trade, so this trade was actually executed on, I had like 15 lots open at 137,615. So this was opened around short position 137 615. This was opened as this 30-minute candle was about to close. I think there were like 5 minutes left for it to close, maybe like 2 3 minutes left for it to close. I opened that trade. My target was somewhere down over here, but I took profits at around 137 515, like 1 to 1 risk reward. um, so that worked out really well. Let's go towards the 5-minute time frame and kind of like break it down based on the 5 minute. And let me just explain how this all worked out. So this was a little advanced trade here where I used multiple time frame analysis here. So this is basically, so if you look on the time at the bottom, this is like 1900 hours and 55 minutes, right? This is the 5 minutes before the candle closed, right? And this is where I took the entry at 137 615. The stop was kept above over here, like around like 10 11 pips. Price went down to, as price came down towards like 10 11 pips, I secured positions because I really didn't want price to like retrace because it's the Asian session. You never know what's going to happen. It's also NFP the next day, so it might start ranging again. So I secured profits once price came down to this minor support level. Because after that, you see price came up. So if you look at the exits were at 137, 513, and 514, right? So if you look at the exits, they were like 513, 514, right on the dot. Because I realized that, hey, it's time, this is the time not to be greedy because there's less volume in the Asian session, and there's a minor support here too. So it just made sense to close positions and let the rest run if they wanted to run, right? So I think that was a very, very good trade there too. I acted on my instincts, closed positions, secured profits. So I think it ran out really, really well. Now, looking at the last trade here on GPJPY, this trade was executed around like pre-New York 6:30, around yeah, like around 6:30 a.m. Eastern. This was a sell over here. This was at like 137,976. So 137,976. So this trade was executed around right over 137. What was this? 137. 976, 137 976, 976. This is where the trade was open. So this was a sell, right? This sell was based on the fact that we had bearish candle coming down, we had a bullish candle, and then we had a bearish candle which closed below these 1 2 3 candles. And then I was expecting this candle to continue moving down and maybe correcting the move down towards 137 663. But who knew GJ is going to continue pushing up, man? No one knew it was going to happen. So actually, that I closed in a loss. That was a loss of like $215.04. It was like, okay, whatever. And then we had a buy on USDJPY. This was the NFP buy. Now, looking back, how could I have taken this buy? I mean, it made sense that price made a high, came down, created support. I think this bullish candle was a confirmation for the next candle to continue up as they made high highs and higher lows and continue going up. A lot of people took these buys on GPJPY and they got like pretty nice returns, right? So that's pretty good, pretty incredible to be honest. So let's take a look at USDJPY here. This was the buy stop on USDJPY. The buy stop was basically placed at around 109, 251, 256. Yeah, 256, 109, 256. Buy stop was placed right over here. Anticipation was that, okay, since we're creating a support over here, I'm going to place a buy stop above the 30-minute candle. Now, 30-minute candle is much more stronger confirmations than the 15-minute candle. So I took a buy above the 30-minute candle in the anticipation that if the price is going to break above the high, it should continue up towards 109,400. It eventually continued up way, way more. I think this move was about like 50, 55 pips. We called it live on the live stream as well in New York, and it ran really, really well. I think I made about like $282 in that day. So that day I made $282 coupled with the Asian session trades I had. So I think it was pretty good. Going over this recap was really, really important because this way, people who are new, you kind of like understand the reasons why I'm taking the trades, the breakdown of the charts and candles, looking at the high time frame, where the stop losses are, where the candles are, where the whole thinking is around, smaller positions, bigger positions. All these trades are actually logged on my Instagram. This is my Instagram right over here. All these trades are logged right over here. For you can go through the trades from March, April, May, June. So let's take a look at the June over
that
here.
happened yesterday as well with GJ. So if you look on GJ, this was the same move that happened yesterday. So these are two that ran really, really well, like around
So these are the same numbers, right? These are the
like
same
50 pips.
numbers.
This is on the
Um,
so I try to keep myself accountable
advantage
with
FX.
everything trading. So calm these
So
days. Beautiful two sells on
see, this was the buy stop on UJ. This was the loss I had. So
JPY
you
from
can
like
watch all these recaps with my withdrawals here too. So I think this helps a lot of people here too. So anyway, this was for educational purposes only. I hope this helped you a little bit. Please like and subscribe, because if you like the video, it helps me a lot, because the YouTube algorithm takes these likes and takes this video and it pushes towards other people who really want to watch the same sort of content. So without further ado, I'm going to see you Monday at 6:30 a.m. Eastern for the New York sessions. Have a great day, everybody.